payroll. So that's just important to know. You can't let somebody go and say, when I get around to paying you, I will. You do need to pay them within 15 days or the next schedule. Payroll. Unemployment. This is something you pay into as an employer, but then if somebody files, I think you have to pay more, so it's not really anything you want to deal with. But to be fair, you should explain, they do have unemployment benefits. This is something, if you get in the middle of this, you might seek help from somebody that knows what they're doing. But just be aware, there is unemployment compensation out there, and if you let employees go, they very well may seek unemployment. They may file for unemployment, and that can affect your operation. Benefits. If you don't have a policy as far as vacation days, you are required to pay out earned, unused vacation. Now, if your policy says if you leave, I don't have to pay you anything on vacation, that's fine, but it does need to be a pre-established policy, not a post-established policy. So just keep that in mind. If you're getting in that situation, maybe let your employees have some time off rather than have to pay them out. Health insurance, if you offer that, just let them know there is health insurance through COBRA. Work with your insurance provider on that is the best thing I can tell you. On if you provide retirement accounts, just let them know, who to contact to switch that over. That's not a legal requirement. That's just kind of a decency requirement. Okay, so that's a little bit about employment. Again, as you can tell, I'm not going to go into a lot of detail unless you ask questions, but hopefully these are some things, some ideas for you to consider if you're going to be closing down the business. So what legal requirements do we have for your business? If you are an LLC, a corporation, a limited partnership, limited liability partnership, there's probably a few others, you are registered with the Ohio Secretary of State as a legal business entity. When you shut down your business, you should dissolve the business. Officially, legally dissolve it. What that does is it takes your company off Ohio, records. It kind of limits your liability going forward, and everybody knows you're not a business anymore. So nobody's going to. I'm not saying nobody will send you bills, but it's much less likely you're going to have future bills coming at you, future collections, whatever. For farms, do leave a checking account open, because if you shut your business down today and you're owed FSA payments, ARC, PLC, conservation payments, that sort of thing, so they don't come till October. And if you shut your bank account down now and those payments show up in October, then FSA doesn't have any place to send them, and it becomes a real hassle getting that money. So I always tell my producers, at least leave a bank account open so you can deposit money as you get it, and FSA NRCS payments is the big culprit on that one. Also, if you're in a multi-person business, be sure to follow your business procedures. If you own the company with somebody else, read the documents as to how you dissolve a company. It very well may take their permission to do so. Even if they're a minority owner, it may take their permission. You don't want to start shutting down a business and the other owner come back and say, I don't agree with this, you can't do this. Have that in writing. Before you dissolve the business, have something in writing. Doesn't have to be real elaborate, and just say, here's all the owners. We agree to dissolve the business. We're going to dissolve it this day. Here's how we're going to do it, if you know, and have everybody sign it. I think that's really important. That way, if things don't go well and not because anybody did anything wrong, but if things don't go real smoothly, somebody can't come back and say, well, I never agreed to dissolve the company. You owe me money. Get it in writing. That goes for about everything, but particularly that. So what does it mean to dissolve a company? So you can dissolve legally. So you can say, we are not going to have a business next year. That's kind of the dissolution. But there's a wrapping up process. The wrapping up process is more of the accounting and tax part of it. And you think, well, how hard can it be to wrap up a business? It can be pretty hard. If you are in a business with other people, particularly if you're not related to those people or not closely related to these people. I'm working with two brothers right now, dairy farm, and they kind of had enough of each other, so they're dissolving the partnership. Okay. Right now, we're fighting over $50 electric bills. We're fighting over junk equipment that they just found in the weeds literally yesterday, and who gets what. It's not always as easy as you might think. So that's part of the wrapping up. They don't have anything in writing. They just, they farmed with their dad, they took it over, nothing's in writing. Wrapping up a 30-year partnership when there's nothing in writing, it gets lengthy, it gets long. We started this in July. You see, I just told you, wrap it up by the end of the year and don't let that deadline go by. I don't know we're going to make that deadline. It's just little things like that. But that's the wrapping up part right now that we're doing. They decided in July to dissolve. Now we're wrapping up. Typically, the wrapping up process, and this is by law. If you have a partnership agreement or an LLC agreement, this is probably in there, but it's also Ohio law. When you shut down and you have assets, so the two brothers I'm working with, we're shutting it down. We've got cows, we've got land, we've got equipment, we've got grain. Well, who gets that stuff? Well, what the law says is the first thing gets paid as non-owner creditors. So that means all the electric bills get paid, all the suppliers get paid, that gets wrapped up. Then if any of the owners are creditors, so if, let's say my client would have loaned the farm $50,000, he gets his $50,000 back. Then you get what you put into the company back. So my clients just kind of took it over, so they never really put anything in, so we're just dividing everything 50-50. But let's say you had two owners and one of them put in $200,000 and one of them only put in $100,000 to start with. That's their capital contribution. You give back $200 and $100 first. Then what's left over you divide by in proportion to ownership. And that's an important point because if you're a third owner, you don't get half the assets. Even if you put in half the work, it's all about the value of the assets and your ownership percent. Okay? And that's just the way the law is. It might not be fair, but that's the way the law is.